Start trading crypto today. Sign up for our step-by-step video series to get set up with the best trading tools. Start analyzing charts, enter and exit trades properly, and most importantly, find out if crypto trading is right for you. Sign up at bitlabacademy.com.
Welcome to Rice TVX. On today's Rice Report, I am once again joined by Gareth Soloway, who is the Chief Market Strategist for InTheMoneyStocks.com. He has been on the show before, and I will include a link in the video description and above for his first appearance. Today, the master of technical analysis is going to share his perspective on Bitcoin, cryptocurrencies, gold, silver, and much more. Before we get into it, visit ricetvx.com and sign up for my mailing list so you never miss an update or new Rice TVX content. You will also find my various social media links and more. You can also find Rice TVX on Odyssey and Library, where I have a full catalog of my videos, post up extra content, and share other appearances. And you can also find Rice TVX on BitChute. Get your free half ounce of silver. Take full advantage of my partnership with Money Metals Exchange in 5 easy steps. 1. Visit moneymetals.com. 2. Be a first-time buyer. 3. Purchase a minimum of $100. 4. Use the promo code RICE. 5. Get a free half ounce of silver, and it's an additional way to support the channel. I will include links in the video description for everything I just mentioned, as well as everything shared on today's video. All right, ladies and gentlemen, joining me on today's show is returning guest Gareth Soloway, who is the Chief Market Strategist for InTheMoneyStocks.com. I will include a link down below and above for his first appearance. Definitely encourage you to check that out. Gareth, welcome back. How you doing today?
I'm doing really well. Thank you for having me back.
Well, I'm always, it's always a pleasure to have you on. As I was saying before we started recording, you definitely have an open invitation anytime you want to come on the show and share your knowledge. You are definitely one of the people I pay a lot of attention to. You do a great job of taking the emotion out of it. You've been doing this for a long time, way before crypto, and I appreciate your analysis.
Thank you.
I was hoping we could catch up in Miami, like we were mentioning before recording, but I did see your interview that you did with Kitco News and thought that was a really good interview.
Yeah, thank you so much. Yeah, I wish we did catch up there. I was just there for a quick little bit, but definitely next year, I'll probably be there for multiple days.
So what I will say about that Kitco interview that I thought was interesting was you mentioned feeling naked because you didn't have your charts. And that's the first time I've seen you do an interview where you really weren't going over charts. So I thought that was kind of interesting.
Yeah, it's definitely a different kind of feeling because I'm used to being able to show people exactly what I'm seeing, and then to have to convey that to people without being able to show them. It's another step. It takes a little extra effort, but hopefully I do an okay job.
You always do, man. And I mean, even though some people may not always appreciate what you have to say, because everybody wants to hear what they want to hear, not what reality actually is. So I appreciate you keeping it real because we're in a really interesting time period when it comes to the financial markets. The end of the fiat cycle, what's going on right now with the inflation, the Federal Reserve, what's happening over in Europe with Russia, Ukraine, and tying it all together. It's just a really very unprecedented time period of history.
Yeah. It really is, especially for crypto, because, this is the first time since crypto's come into existence where, interest rates are being pushed up dramatically. And then also, when we've never had an inflationary period, really above 2% until this period now. So it is uncharted territory, especially for cryptocurrency.
Well, since you mentioned it, we're recording this on the 14th of April, and it's going to be released the very next day on the 15th. But we just seen the CPI data come out. What are your thoughts with the CPI data and where it's heading?
Yeah, so I mean, the CPI data coming in around 8.5%. PPI came in the day after. It was also very, very hot. Market had kind of anticipated it being at those levels, so you didn't see a massive reaction in the stock market or in crypto. I mean, we rallied for a couple days now in crypto. We're pulling back, but bottom line is, it just kind of reinforces everything that we know, which is inflation is here. It's not going away anytime soon, and we're going to see the Federal Reserve have to tighten dramatically. The Fed has really kind of sidestepped what they used to do. So over the last 10 years, it was always the stock market first, right? Inflation was low. So how do you stimulate growth, get the stock market to rally? By default, crypto had an amazing, amazing move, both in 2017 and then 2021. But now you're at a point where the Fed is saying, okay, listen, the scarier monster in the closet is the inflation monster. So now forget about the stock market, forget about crypto and all these other things. We now have to tighten liquidity. And I think that's really, really key to understand as an investor, that the mindset of the Fed has changed. So we heard for so long, don't fight the Fed, right? Don't fight the Fed when they were printing money. So you just wanted to go long, buy the dips, go long. Now, technically, we should be kind of thinking about it the other way. Don't fight the Fed, but this time it means, be very careful going long, assets like crypto as well as stocks.
Well, what was interesting, and it could have been the same day or just the same time period, was Kitco also interviewed Alex Mashinsky from Celsius.
Mhm.
And he kind of feels that this was going to be good for cryptocurrency, higher inflation. And I've been hearing a lot of different analysts saying that this 8.5 is going to be the peak and is going to start tapering down. But just with my limited knowledge, I don't feel like that could take place.
Mhm.
Do you think that this is going to be the peak of the inflation, or do you see it going higher?
So I think just because of what's going on with Russia invading Ukraine, and we've seen energy prices go up dramatically over the last month. Natural gas is just going parabolic this last week or so. So that'll keep inflation at 8.5, maybe even a little bit higher for a few months. I do think as the supply chain kind of gets fixed, you'll see inflation come down, but it's not going to go back it's one thing if inflation came back to 2% or 1% or zero, then it's like, okay, that's fine. But my fear is, and I think this is what we're going to see, is that inflation is going to be very sticky at like 5%. And 5% inflation still really sucks, right? I mean, it's basically 95, you have a dollar every year, it's 5 cents less, and it
Right.
just continues to decline. And so, 5% inflation is not good at all. And if that's their target, if that's their long-term result, that is really, really bad over the scheme. I mean, think about it. Over 10 years, your money is almost worthless at that point. I mean, you lose at least 50% in
Right.
about a 10-year span. So I think this is what we're going to see. So I think, inflation, it may kind of be around the highs. I think it stays here for a few months, then maybe comes down, and people will probably congratulate the Fed. Oh, you're doing such a great job. Your inflation's coming down, not realizing that it's going to be a longer term problem just at kind of a midpoint of like 5 or 6%.
And a problem that they created as well.
100%,
So
100%. And one of the things I think is so important for investors to understand is that naturally everything has a cycle, right? You have cycles in nature, you have the seasons, you have the months in the year. We cycle around the sun as the earth, the moon cycles around. There's always a cycle. And with markets, they're supposed to have natural ups and downs. You're supposed to have, expansionary periods and recessionary periods. The great thing about letting things run naturally is that you have very minor recessions. No one likes to go through it, but you have a little downshift and then you grow again. When you start to get into this kind of fiscal, steroids, it kind of throws the whole cycle out of whack. So you have these
yeah.
expansionary periods like from 2009 all the way to now, where it was fueled by this just injection of constant money. And the problem is that the cycle wants to come back. And eventually it will. The problem is it's way worse. When you artificially inflate things, then the down cycle is artificially bigger as well. And that's really the scary thing. And we kind of saw that in 2008 and 2009, where you had a lot of the same factors, just not even close to as crazy as we see now. But we saw what happened, the financial collapse. I mean, mega banks were needing bailouts from the government. I can't even imagine what we could see in the next 10 years as this big one gets unwound.
No, I totally agree. And I've also recently interviewed Lynette Zhang from ITM Trading. Are you familiar with her?
I've heard of her. Yeah.
Okay. She's really very adamant about hyperinflationary depression. I mean, we just seen another inverted yield curve, which we've seen also in 2019. And talking to her, I didn't realize that we did experience the recession that an inverted yield curve points to, because it's been accurate 100% of the time. But the difference was it was during the pandemic issue, when there was a lot of injection of the steroids, the money printing that was
Yeah.
going on. So we really didn't feel the recession as much as we would have, as if it would have been a more naturally occurring experience. So with us having another inverted yield curve and seeing where everything is headed, what are your thoughts when somebody says and then talking about a hyperinflationary depression, which is probably one of the worst case scenarios you can consider?
Yeah, so I think that's important for viewers to understand, is that, usually when there's inflation, it coincides with a strong economy. And the reason the Fed can raise interest rates during that period is because the economy is strong and can withstand it. So they get inflation under control while it's a strong economy. My biggest fear now is that you're going to see what's called stagflation, where you have this inflationary bug, but the economy actually is no growth or negative growth, meaning a recession. And that's the worst. And the reason why it's the worst is that if you have growth and inflation, at least people are making more money while prices are going up. So it's like, okay, well, an apple costs $1, but now I make a dollar more in earnings anyway. So it kind of evens out.
Right.
When you don't have growth and you have a recession, people are losing their jobs and prices are going up. Right now, we kind of have some growth, but prices are going up way faster than wages, and that's a big problem for a lot of people, especially food and energy wise. So I do think that inflation is here to stay. Hyperinflation, I really hope not. I mean, I'm hoping that the Fed is starting to curb it now and will be aggressive enough. But what I really fear is that inflation is going to stick around for many, many, many years, and that we're going to have to go into recession. And I've racked my brain, and I keep on asking people. I'm like, okay, so if we go into a recession, how do we get out of it? Right. So in the last 20 years, it's always been the Fed has come to the rescue. Well, with inflation at 8% or 10%, you can't
Right.
come rescue it with more money printing. So what can they do? And that's the scary thing. It's like, okay, well, you take away the ability to get us out of a recession, and we're really in a lot of trouble, where it could be a sustained like decade. It could be like the forgotten decade of no growth or recession for a really long time.
Yeah, because there is a lot of talk of people starting to change their spending and their buying
Oh
habits.
yeah.
And obviously, if we're talking about coming food shortages and things like that, people are going to be taking care of the things that are necessities
Mhm.
versus the wants, the wants versus the needs. So yeah, no, I appreciate you kind of giving me your insight on that. I know a lot of people are definitely wanting to us to get to the charts, and I'm
Yeah.
excited to get to the charts. So if you want to do a screen share, let me know when you're ready and I
Sure.
will throw that
Yeah,
up.
what would you like? What should we discuss first today?
Well, I mean, you are the master. So where would you like to take us? I mean, obviously, a lot of people. I'm really interested in Bitcoin,
Yep.
um, cryptocurrency in general, gold, silver, and maybe even potentially crude. But whatever else you feel like sharing.
Yeah, so let's start with Bitcoin here. So the Bitcoin chart that I've been following has been amazingly accurate in terms of the channel that we've been stuck in, and this goes all the way back to January. And basically, you create this channel, this white line channel with this point down here and this up here, and you just connect the exact highs here, the exact lows here, and it gave us this exact high. So I know a lot of people were kind of hearing, oh, we're going to have a major breakout on Bitcoin, and it goes right to that level. If I throw in my 200 moving average right there, and it just reversed and came crashing right back down. I did buy Bitcoin right at this trend line here. We've gotten a little bit of a bounce. Now, today, we're seeing the equity markets decline. This needs to hold here. If this trend line doesn't hold, then you're going back to this level down here. And that's the one that, if you're someone who's like bullish on crypto over the next 6 months, you got to hold this line. I mean, this is like hold the line, kind of thing, where if that doesn't hold, then that's concerning. Then you start having the potential for us to go quite a bit lower. Let me zoom out a little
So
bit.
what is that price of that line?
It's right around 37,000. So we're
Okay.
still 3,000 above it, about just under 10%. But that's the one where if you break basically this pattern formation from the drop is called what we would refer to in the technical world as a bear flag. So it's a big move down and then a lot of choppy sideways consolidation. And
Okay.
the unfortunately, and I hate to say this because I know there's a lot of people that are long crypto and bullish, but if this lower trend line breaks here, that's where you start to get that bigger move down where you could go into the 20,000 range. There'll be some stops along the way, but that's the one that everyone should be watching very, very closely.
Okay, so basically, the last time you came on the show was March 2nd, I believe, and you were definitely in that mindset that we were going to be seeing 20K or
Yep.
potentially below. So you're still in that same mindset. Nothing's changed.
Yeah, mainly because the chart hasn't changed, right? And again, I think it's important for us to be as logical, as disciplined as possible. Where if the chart still says it, then I have to go with that. And what you can see here, and I think when we talked before, it was kind of in this same range, but you've stayed right in within this pattern. So therefore, the pattern is the pattern, the odds, the probabilities are the probabilities, and it still signals the likely scenario. It doesn't guarantee it. I think that's important, but the likely scenario would be for a move down. Now, if we started trading up here, then that would change my perspective on it because now you've broken this kind of bear flag pattern. But right now we're stuck within this range and you have to just go with what the charts, at least for me. I always like to say, listen, my emotions, my heart might be somewhere else, but the charts are always, the charts generally are going to be right more than me. Yeah.
And that's one of the things that I do like about you. I mean, you're very honest about your thoughts about the future of cryptocurrency and blockchain technology. I mean, you're definitely for the technologies and you're
Heck yeah.
bullish and you're definitely long term to the moon. But short term, you think, and medium term is such, you are thinking much more realistically. And really, in order to be a really good, successful trader, you have to be able to cut that emotion out. And for you to actually have, I could tell there's an emotional attachment, but you're not,
Yeah.
it's not intersecting in between your trades. You're
Yeah.
very much robotic when it comes to
And and
your
that's
trades.
that's basically because I've learned a lesson so many times, in my early career, so many losses came from my hopes and dreams for a technology with a stock or, I mean, and eventually you get burned so many times. You're like, okay, I got to try to shut off that emotional side so I just don't keep losing money. But yeah, I mean, that's really where I found my groove is just saying, hey, listen, whatever I hope, whatever I fear, it doesn't matter. What is the chart saying? And in this situation, near term, if this white trend line breaks, that's where we get the bigger down move. Now, like you said, I mean, like I'm a huge believer. I mean, Bitcoin since 2012, I've been following it. And the idea that, I used to watch in the stock market, the Federal Reserve bailing out these banks from 2009 with just like printing money, the government printing money. And it just doesn't make sense, right? Anyone who runs their own household and has to budget their money, it's like, well, this is never sustainable. So that's where Bitcoin for me comes in, and it's just the genius behind it is it gives us that alternate investment where even if they do print trillions more dollars, the idea is eventually Bitcoin becomes that asset that goes up as the dollars get printed, and it offsets the losses that you would otherwise have by holding dollars. It's just Bitcoin isn't at that point yet, right? It's still such a new asset. It's kind of like what we'd probably consider to be an adolescent. It's not a mature adult yet. Once it's an adult, then I think it behaves much more like gold. It goes up when there's fear. It goes up when there's money printing. That'll be the way it eventually reacts, just not quite yet.
That makes sense. Now, as far as the 20K price, is there a time frame that you're looking at
Yeah.
for it to hit in those areas?
Yeah, so the biggest thing, and this is the only thing as a technical trader, you just basically have history on your side. And again, history doesn't guarantee that it repeats, but we do know it usually rhymes. So what I do is I look back at like 2017 and I basically see, okay, well, from the peak in 2017, we didn't bottom out until almost basically 2019 to 2000, into this area here. So you basically had a full basically 2017. Yeah. So you had a year to a year and a half where it was kind of in this downward shift before you started to curl back up. So I kind of, and if you look at 2013, it's very similar, 12 to 18 months. So that's all I can really go by is saying that, okay, from our high pivot in November, I just would look out 12 to 18 months and say, okay, we could be in a down moving market until that point, and then start looking for that target to get hit. Now, whether it's 20,000, whether it's 18, whether it's 15, it's hard to know. But I do think, again, that's kind of your angle for how you try to figure it out.
Okay. Now, on the short term, how are you feeling?
Yeah, so short term, like I said, I mean, I'm a trader, right? So in my crypto service, Verified Investing Crypto, we shorted it right up here. Then I covered it right around here. We went long right here. So I'm long Bitcoin right now. I was up a little on the trade. We're now basically flat on the trade, but I'm just playing these levels. And the beautiful thing about a chart like this is that it really gives you the ability to trade while there's just a lot of chop going on. So you short resistance, you can see the levels here, and you can buy support. Now, my one fear is that we see a dip here, in which case I'll probably add to my position. But at that point, then if we got down here, I would have to stop out. So you always want to kind of, one of the biggest things for traders is that, and for those of you watching, if you're trying to become more of a master trader, you always want to think like 3 steps ahead, right? So you don't want to just be like, oh, I like it here, so I think it's going to go up. Well, yeah, that's what we hope happens. But what if it doesn't? How do you react? How do you cushion yourself so you can maneuver? And what I like to do is, I think I only have about 4% of my portfolio in Bitcoin here, but if it drops here, I'll go probably to 10% and then look for the bounce. And then if it goes here, I stop out. And so you're always looking at both sides of the trade, both if it makes you money, but also if it goes against you, so you know how to react.
I mean, that's all strategies, having multiple strategies and sticking to it. That's the other important thing, because because obviously if you come up with a strategy, you have for a reason, and then you get involved in the trade, and a lot of people succumb to the emotion and they don't stick with even their own plans. Human psychology definitely is probably the biggest factor when it comes to the market.
What do they say? Everyone has a plan until you get punched in the face. In this case, everyone has a plan until that trade just goes way against you, and then out the window it goes.
Right.
Yeah.
So for the year, just for the remainder of 2022, do you see Bitcoin specifically hitting back over or coming close to all-time highs, or even
I
hitting
don't see it.
100K
Yeah,
this year?
I don't see it this year. According to the chart, 2022 should continue to see further downside. I think it makes a lot of sense if you look at what the Federal Reserve is doing with hiking rates. We've seen technology take a big hit, and technology stocks like Tesla, Apple, and these kind of stocks, they've already dropped down. I think there's more downside there. So I do think, you'll have opportunities to buy key support levels to make money on Bitcoin all the way down. But my guess is that we are lower than here by the end of this year. Now, the one thing that would change my mind would be if somehow we start trading above this area here, then I think you have a shot at your all-time highs. But as of now, you're stuck in this bearish consolidation, and inevitably, I think at least the odds favor that we do see a drop.
So you see by the end of year being lower than where we're currently at now?
I do, yeah. Per the chart right now, that's what it
Okay.
does signal. Probably within the next month or so, we have a good shot of breaking this area, and that's where you'll get your next move down. Now, there will, one of the important things is if you want to be a trader, there are levels to buy. Like, for instance, I would probably look to buy 28 to 29,000 right here just for a quick bounce back to 30 or 32. Right. And then you get out, you can either go short or you can let it fall. And then there's more levels along the way, like 24,000 here. And then eventually you get down to the big one. And this is going to be the big one, which is going to be that 20,000 level on the chart right here. That is going to be mammoth support. Now, that's never happened in a previous Bitcoin cycle. So that would be a first. But it kind of makes sense. If you look at the crypto markets, there's so much fluff in there, so much kind of junk, if you ask me. Like, what do we have, 18,000 plus cryptos now? I mean, is there really a need for that many cryptocurrencies, or do you need to see a washout in the crypto sector where eventually the best of breed come away and kind of lead the charge back up, and you get rid of a lot of the nonsense?
I feel like that will be taking place, especially as we get a lot more clarity with regulation.
Yeah.
Because it's still kind of the wild, wild west, and people are still trying to come up with new ways to do the 2017 ICO craze by offering up different ways, just trying to think they're getting around the SEC, but I think it's all going to kind of come back. And I agree, there's way too many cryptocurrencies, and it affects the entire market.
Yeah.
It's like I wonder where the price of Bitcoin would be if we only had like, let's say 100
Yeah.
different cryptocurrencies and the market wasn't so diluted. How much more the market share would it have received, and where would we be at today?
Yeah, no, I agree with you. I mean, it's very Darwinian like that, in that you actually want, if you're someone who really believes in crypto, you do want to wash out. I mean, it's not pretty. There's going to be a lot of people that will lose money, but if you really want crypto to be something that the future generations has, you can't have all the nonsense in there.
No, I agree 100%. And there's just a lot of projects that do not have any intention of doing anything. So we definitely need those washouts, and then just the speculation and the teams that don't have really what it takes to do the vision that they have. I mean, unfortunately, there's a lot of people who end up biting off more than they can chew. So
Yeah.
it does take place. Now, how are you feeling? I mean, I'm assuming gauging your viewpoints on Bitcoin is a good way of gauging how you're feeling about cryptocurrency overall.
Yeah, so I'm kind of in that camp where like Bitcoin is still kind of the gorilla in the room, that it's going to lead, meaning that if it sells off, most of the other cryptocurrencies will sell off as well. So, like for instance, on Ethereum, if we want to take a look at that, we can take the big level for me to watch on Ethereum, which probably breaks if Bitcoin, that lower trend line or the white trend line breaks on Bitcoin. This would probably break here, and this is the one that investors should be watching. See how, I mean, it's amazing how many times you've bounced off of this line over the last, really basically the last year, right? But at
Mhm.
some point, if this does break, and it's an if, but if it does break, that would be a significant decline that would likely, I mean, I hate to say this, but I mean, in the very minimum, you'd be going down to, 1700. I think even a potential of going down to 1250 maybe is in the cards if that happens.
It's interesting. That number, the first number that you have, is at 2,700 ish.
Yeah, right here.
Yeah. And it kind of, I'm not saying it looks parallel exactly to the Bitcoin chart, but it's similar to that 37K range.
Yep.
So
Yeah,
it's
and,
kind
and
of
that's
like,
what you'll find is like if you flip through a bunch of cryptocurrencies, they all have these kind of major trend lines that they all coordinate, right? So if Bitcoin's hitting it, then Ethereum's hitting its level here, and they generally will break together because, if money's getting scared in Bitcoin, it's probably scaring money in Ethereum, or the same investors hold some Ethereum, and therefore you create that kind of that domino effect.
okay, that makes sense. Now, a lot of people are speculating that by September, October-ish, we should see ETH 2.0 merge
Mhm.
taking place successfully, potentially the XRP case being over in the favor of XRP. Now, I know you can't foresee these things, but if both those things took place successfully around the same time period, is it possible to jumpstart and kick the market back into action, or would it just be something minor that takes place and we're still going to resume course ultimately?
Yeah, to me, it's probably the investors within the market already are anticipating it. So a lot of that, the hype and the excitement is probably already in there. Once it happens, you'll see a little bit of kind of media attention. But in general, the charts for me are always paramount, and if they're still signaling downside, and they're still, and this is why, right, is because you could have the greatest thing with Ethereum or Bitcoin, but if there's absolute panic in the market, and we're not just talking crypto markets here, it's important to understand the connection between all markets. Housing right now is starting to take a hit because interest rates have ripped through the roof.
Right.
You have stocks that are taking it. So there's this chain reaction where crypto is not isolated. And therefore, if you're still seeing these type of things, then it's likely that, maybe you get a small bounce at that point. But if the markets are still heading lower as a group, Ethereum probably does head lower in the near term. Now, it could be the greatest thing for Ethereum longer term. Like it could be the bull case why in 3 years from now, Ethereum takes out 5,000 and is off to the races to 10,000. But usually that short term panic is always number one.
And that makes sense. So, being the bullish bear of crypto, how are you feeling with the other side of things, which would be gold and silver, your precious metals? Do you see 2022 being a breakout year for precious metals? Do you see gold hitting all-time highs?
Yeah, so I do. And again, gold is where I hope Bitcoin gets to in a year or 2 years or whenever it bottoms out. I mean, so when I look at like how do I protect myself from the current inflation today, it's really gold and silver, right? Now, Bitcoin eventually becomes that, but right now, now Bitcoin's been going down, right? So it's not protecting you at all. In fact, you're losing even more money with inflation and the drop in cryptos. So gold is definitely on the radar as a place to hide, to at least kind of protect yourself from the inflation. I mean, gold is not a sexy asset in that it doesn't rip 20% in a day or
No, it just
anything.
is a life jacket. It
Right.
preserves what you
Right,
have.
exactly. But
It
it's just
helps
a
you to
place to kind of
maintain.
store capital until, in my opinion, like that's kind of where I envision it, is like store capital in gold and silver until Bitcoin kind of gets to a level where it makes sense, and then start rotating money into Bitcoin and to Ethereum at certain levels where it starts to look like it's behaving more as a safety asset.
Okay. So is there a price that you're kind of eyeing for an all-time high when it comes to gold and silver? More
Yeah, so
specifically, gold since
I
we're on a
do
chart.
think this year we could easily be at 24, 2,500 by year end. So I mean, there's some significant upside there, about $500 or so on spot gold. And then I think also in the next 5 years, you easily, I mean, maybe even in the next 3 years, you could be at $5,000 an ounce. Because again, like, at some point, and again, I love the 1970s, folks. For those of you that are students of history, if you look at the gold chart from the 70s, it is identical. In fact, I can show it here. Let me get rid of some of these lines. But basically, just to show everyone what I'm talking about here, is from 2000 and basically 2018 to 2020. So 2 years, you had a nice move up on gold. Gold went from $1,150 to $2,050. Then you had 2 years of consolidation here from 2020 into 2022, where we are, and now gold's broken out, right? So the beauty of it is what we do is we can go back. Let me go to the weekly so I can get there a little faster. But basically, we can go back to the 1970s. Let me zoom in a little bit. And you can see that same pattern. So from 73 to 75, you had this up move. Then you had 2 years of consolidation, just like we just had on gold. And then gold broke out. And then look at this crazy run on gold. Now,
Yeah,
like,
that's insane.
gold went from like $100 an ounce to 900. I'm hard pressed to believe that gold's going to do that times X, right? But especially with Bitcoin in existence and cryptocurrencies in existence. But I do think, from 2000 where we are now, could it be 5,000 in 3 years? Yeah, heck yeah, it could.
Well, I also feel like the central banks are going to do what they can, obviously, to continue to manipulate the price of gold and silver, because a rising price in gold is an indication and a failure of the money supply.
Yeah.
So, and right
True.
now, people are losing confidence, and they need to do everything they can to maintain that con game until people fully lose that confidence in the system.
Yeah.
Um, which is going to be really interesting to watch. Now, do you feel like silver is going to be performing just as well as gold, or maybe even better this year?
Yeah, this year I do think silver at this point silver has broken out as well. So it's just retracing. So I do think it has a shot of at least getting back to, at least this year it should attack $30, right? So, and it doesn't seem like a lot, but I mean percentage wise that's still a nice gain on here. That's going to be your big spot. Now you can see this trend line here, how you finally broke out right here. You're retracing, now you're starting to pop up again. But I think the first level to kind of fight through is going to be this $30 per ounce level. And then once we get through that, I think that's where you could get that explosive move where you see massive short covering. But 30 is first the level, right? So you got to get through that. It probably hits it and pulls back initially. And then maybe later this year, maybe it can get through that level.
Do you see silver following gold the way that the rest of the crypto markets follow Bitcoin?
Yeah, I think so. It makes sense. Overall commodities. Now, silver does have a kind of industrial side to it. So if the global economy is really suffering, maybe silver is kind of, lags initially. But bottom line is, the continued inflation, commodities have to go up. I mean, general commodities need to go up, especially metals. Oil is kind of an interesting one because, it's based on economic stimulus and economic kind of activity. So if we go into a global recession, then oil could be the one outlier where it comes down dramatically from where it is. But yeah, I mean overall metals, especially metals, I likely think they're headed much higher.
Is there any other metals that you're looking into or that you're trading besides gold and silver?
I don't trade platinum too often, but we could take a look at that chart here and just see what it looks like. So platinum looks kind of similar to the gold chart in that it's been consolidating here. The only thing is it doesn't look like, well, no, it actually did break out here. So actually, interestingly enough, I actually like the chart of platinum here because it's come all the way back to this trend line. So this is major support. This is what we call like a kind of a breakout here, and then what would be considered a retrace to the scene of the crime breakout. So in terms of support, this is a good level on platinum, and platinum does look pretty good here.
Okay. Yeah, I mean, I would think, there's going to be a lot of similarities in some of these,
Yeah.
because of just the grouping, and I've noticed that. And then you can overall look at commodities as a whole, and like you're saying, look at the tech sector as a whole, and kind of see a lot of parallels. I mean, obviously, you're going to have oddities and stuff happening in different news pieces, but so
Yeah, this is kind of a cool trend line too. So I just went back to the daily and kind of zoomed out. There's this trend line of support, which you just tagged right there. And you're also holding this breakout line. So kind of an interesting little opportunity there. And the nice thing about this is if platinum starts trading below 950, then you'd want to exit. That would be a big breakdown. So I like trading opportunities where there's a very defined risk where if it gets below this level and you're only down, $20 on platinum, it's like, okay, well, I gave it a shot. I lost a tiny bit amount of money and now I can step aside.
that makes a lot of sense. Now, when it comes to the overall stocks, I mean, I think that you've said that you still feel like the markets are still a little bit inflated.
Yeah. Yeah, for sure. So I love showing this chart here. This is a chart that this trend line goes all the way back to 2012. And this was like the long-term normal QE, which by the way is not normal. QE was printing of
Well,
money
it
by the
became
Federal
normal.
Reserve, but it became a very normalized thing where it's like, okay, well, the Fed is just going to print X dollars. It is what it is. That's what they're doing. And then you had this scenario where they just went crazy during COVID, right? So you had the COVID dip and the markets went on this like steroid push. So I've been saying this for a while, but it makes a whole lot of sense that if they really are pulling back on that extra stimulus, in the very least, we should go back to this trend line or maybe below. You could almost put in a secondary trend line like this that's kind of parallel. And you can see here and then here. And then obviously you had the panic of COVID right there.
And
But,
that was March of 2020.
yeah,
That
that was March of 2020 right there. But, somewhere in this vicinity makes a whole lot of sense. And this is, by the way, this area is if we just return to like 1% GDP growth with kind of this, my fear is that the Fed again is going to push us into recession, which then that's where things get scary and you could start trading down below that level.
Well, it sounds like an incredibly good shorting opportunity.
Yeah, yeah, shorting is scary because this is what's so crazy about it. So you're right. Chart wise, there's a no-brainer short here. If you turn off that mental kind of thing, but then on the other side of the coin, you have to kind of say, well, the Fed keeps on just like bailing us out every time. So what if we start to dip and then the Fed comes out and bails us out again, and then you get caught in a short squeeze. So I am short some of the market. There's no doubt about it. But at the same time, I mean, it's tricky when shorts have been fighting the Fed for so long and kind of the artificial nature of what they've been able to achieve. It's tough on the shorts. There's no doubt about it.
Yeah, no, I agree. And I mean, I don't even trade like traditional stock markets, but it looks like it would be a good opportunity for shorting. But
Yeah,
again, none of this is financial advice. But if people
sure.
do want to learn how to trade, we'll get to that towards the end of the interview, where Gareth will explain all the different opportunities that you can take advantage of with some
Yeah.
education. So from here, man, I mean, I'm pretty much open minded. Is there any other stuff besides crude oil that you would want to share, and kind of give an
Um,
indication that's pointing us towards, more of what you're saying,
I think
that
I think
we're
it would be fun to look at it. I mean, one of the craziest charts right now is natural gas. I mean, it has just gone absolutely insane. And one of the things I'm keeping an eye on here on natural gas is this insane move up that we've experienced, right? And the reason why I'm kind of focusing on this is because you actually hit this longer term trend line today, where if you take this pivot from 2019 to the pivot from 2021, you've actually now gone back to that upper line. So I always look for these type of trend lines because if it had this type of pullback off of that line, I mean, there's a decent chance that this is finally getting near a high pivot on natural gas. And so, there's KOLD, which you can buy. It's a 2 times ETF and it's really volatile. Or you could short the UNG, or I mean, there's lots of different ways to play it with stocks and so forth. But I think natural gas is looking very interesting as a pullback opportunity here. Really wild stuff. I mean, just think about this. Just going back to mid March, so 1 month ago, we've almost gone up. We're up about 70% on natural gas.
in a
That's
month.
incredible. I mean, that's the equivalent of oil going up to 100 and, basically being at 100 then getting to $170. I mean, it's a mammoth move.
We're talking about 1 month, 30 days.
Yeah, 30 days, 70% move up in natural gas. So those are the types of opportunities I look at. They're very scary, but that's usually where I find the best opportunities. The key to mitigating fear is to do small amounts of shares or coins, right? If you're trading crypto, if it's a scary chart and it's falling off a cliff, like let's say Bitcoin does get down to 20,000, you don't have to put all your account in at 20,000. What I do is I dip the toe in the water, right? The little pinky toe goes in first. And then I'm like, this is no big deal. And then if it goes lower, I'm like, all right, now the next toe and and you dollar cost average in. And it's a way to kind of mitigate that fear where, if it goes against you in the beginning, it's not really that big of a deal, but you're getting your toes in the water and your dollar cost averaging.
I like that strategy. Now, with everything that's happening with natural gas, would you say this is a direct cause of what's happening with Russia, Ukraine?
Yeah, I think that's part of it. I think at this point, I mean, the U.S. has so much natural gas. This is getting a little ridiculous, but I think also it's probably a short squeeze. So there's no doubt that I'm sure there's institutions that are short natural gas and individuals, and they're getting squeezed out up here, which is kind of adding to that move to the upside. So it's definitely started with Russia and the potential to shut down the pipelines to Europe. And then the Biden administration saying, hey, we're going to start shipping some natural gas to Europe. But then it's kind of roller coastering into a short squeeze that eventually ends, and then price does come back in a little bit.
Right. How are you feeling about crude overall?
Yeah, I'm still in the camp that crude oil is going to head back down. So just take a look here. This is your WTI chart, and I love showing this. Let me get rid of these trend lines so it keeps it as simple as possible when I show the larger time frame.
And I
So
bring
I
this up because we talk about food shortage,
Mhm.
energy issues, and obviously crude is kind of at the heart of all of that.
Yeah, so this is one of the coolest charts here. This is the monthly chart going back to 2008. This was the high in 2008. And by the way, back then, oil was around $140, $145, and Goldman Sachs comes out with like a $200 price target, right? And they basically marked the top. So I don't know if they were fibbing and going the opposite. I don't know, who knows what. But what's interesting is when we were up at 120 to 130 here, Goldman comes out and gives it a $200 price target. And what happens to crude? It comes right back in. So, little things like that you start to pick up on. It's not a direct indicator, but you just kind of say, well, that was interesting because I remember, 13, 14 years ago when that happened. And then you just look at this parallel channel again, and it makes a lot of sense why oil wasn't going to break 130 here, and it's come back in. Now, eventually, I do think oil goes back to, I have a next couple month target of about $85 on crude, and that would be this pivot right here. And the idea here is very simple, the logical view. So everyone gets caught up in the emotion, right? But if you think about it logically, when oil goes up, people drive less, they fly less, prices are going up, so they have less disposable income to fly. So it slows the economy, it slows people using gasoline and
Mhm.
oil, and it naturally removes that demand from the side of it, right? So just naturally, even with Russia's, I mean, and number one, Russia's still selling their oil to China, so I mean that's still getting out there, but the market was fearful that it was going to get totally cut off, and therefore it went up. And that demand destruction from a high oil price is easily making up the 5 million barrels a day from Russia. So it should come back in. If the Fed continues to hike interest rates, then I would fully expect that you're going to see demand destruction as the economy weakens, and that'll bring oil down to 85. Maybe even by the midterms, it could be 70, 75.
It's crazy to even think about this because it was some time period of 2020 that it was like trading in the negative.
Oh, man, that was wild. That's right over here. This
Yeah.
dip right here. Unbelievable. I mean, I still remember trading through that, and like it was, I mean, you just never, I'd never seen anything like that in my life as a trader.
Yeah, because I mean, from a perspective of somebody who doesn't understand a lot, it sounds like, are they giving us gold? I mean, giving us oil?
Yeah.
It's free? Like it, so yeah.
Yeah, I mean that's really what it came down to, is that you had individuals that they didn't want to take. So basically, when the contract ends, you either had to pay to get rid of it and sell it for a negative, or you had to take delivery of like 10,000 barrel. I don't remember if it's a 10 or 100, but it's like and like people that are trading it, they don't have they're not going to take possession of literal barrels of oil
Right.
in
It's
cold
not like they
houses.
have a
So they
tanker
had to just
farm.
dump it, and then that caused the price to go negative. Yeah, it was just wild times.
Yeah, that was I mean, again, like 2008, the system should have been done.
Yeah,
And March of 2020, it should have been done again.
yeah.
But yeah, obviously, if you can halt trading and prevent the system from crashing, I guess yeah, you can do it as long as you can. But
Yeah.
it's really interesting to see where we're at. Was there any other markets or anything else that you wanted to cover?
Oh man, that's a good question. I mean, I think in the same kind of function as natural gas and oil. I mean, there are certain stocks out there that I think are getting a little ridiculous to the upside. One of them is like Mosaic, which is a agriculture stock that's getting very extended, and I'm kind of going on the bias of that. You're going to see more of these products like agricultural, soil amendments and stuff like that, fertilizers come on the market. So I think certain stocks like this are probably getting extended. Another one I think is likely ready for a pullback is Bristol Myers. Bristol Myers is kind of viewed as the safety play. So when technology is selling off, people are running for cover. But I love this trend line going back to 1999. This high pivot connected to this gives you the high here. And look at how overbought, how many green candles you have. So to me, it makes a lot of sense that we'll probably see a pullback in something like Bristol Myers, at least in the short term. Who knows where it is in 6 months, but probably over the next 1 month, a good retrace back to 70 or 68 is likely in tune. But aside from that, I think it's just a market where you have to be nimble. You can either be in cash or with some long-term positions, or if you're going to try to trade it, you have to be in a situation where you can maneuver, right? And here's the Nasdaq 100 chart, and we can see how that pulled off beautifully right off that level right there and is now coming back in. So it's a wild market, and remember, without the Fed stimulus, the market basically, it's like if you go bowling and you put those bumper lanes in, that's what the Federal Reserve was for the market, where you could basically be the crappiest bowler and you'd still make money, right?
Right, right.
But now they've taken it away, so now people can do gutter balls, and it really creates that kind of volatility in the market.
That's where I'm not seeing like that's where for me, like it seems like if they stop and they keep raising interest rates and continually doing it like they're talking about doing like several times throughout the year and continue to reduce how many bonds and stuff that they're buying, I just see it crashing the system.
Yeah. Yeah, I mean that's the big issue is that the idea the Fed wants that there's enough buyers out there to absorb what they're not buying. I'm doubtful of that. I mean, no one wants it's everyone wanted to buy it when the Fed had backstopped it, but now that you're taking the backstop away, it's like do you really want to risk that? And that can create a chain reaction through so many things. I mean, there's people say that like the consumer's in a really good place right now. I'm not as convinced of that. I think there's a lot of loans out there. People are paying these astronomical amounts for homes in the US, getting a lot of loan debt like that. And you get one hiccup that causes a recession and you'll have a financial crisis again of epic
Yeah.
proportion.
Well, they're now putting out credit cards that are backed by the equity of your home.
Yeah.
So
Yeah.
can you imagine how many people are going to lose their houses over credit card bills
Yep.
or
And then
lose
these
equity in
companies,
it?
it's so popular now, these buy now, pay later companies where, you buy something, you just pay a little each month. But I just keep on thinking, okay, well, if we get in a recession and what are people going to stop paying? Well, they're still going to pay for their rent probably because they want a place to live. They got to pay their food, which is now way more expensive. So that TV, maybe I'll
Right.
not pay. And then all of a sudden you have all these defaults in that area too coming in.
And it's like right before 2008, we saw all the lending to people who did not qualify for loans at all. It was a complete setup to just demolish people. And I think that's
Yeah.
more of what's going on. And then if you want to get a little bit conspiratorial and you want to look at what's happening with a lot of the things that the World Economic Forum is saying and their goals and agendas, and me knowing, like for example, Miami. Miami is being and Florida in general is being bought up by New York and
Hmm.
China.
Yep.
And there's real estate companies through VC money that are offering way more than homes are worth to obtain them so that the everyday individual can't even obtain them and kind of going in that direction of you'll own nothing
Yep.
and they'll want you to try to be happy about it. But
Yeah. Yeah, I mean, the one thing I see that type of stuff going on, and I see kind of the crazy predatory lending stuff, and it's just history repeating again. And this is the problem, is that when the Fed makes money so inexpensive, it encourages kind of risk taking. And then the problem is that now the Fed's like, oh, well, now I'm going to take away the safety net, and then you're gonna how do they not expect that you're going to see some sort of collapse from that? I mean, to me, it's
Right.
nuts, but it's just
It's a
for us.
damned if you do, damned if you don't situation. Because if they keep injecting money, it's just going to cause the inflation to get
Yeah.
worse, and we will see the hyperinflation. If they don't, and they do it the wrong way with the opposite, it could just crash the entire market.
Yeah, and I think one of the greatest things though is that, like you're here talking about it, we're talking about it. I think people that make themselves aware can take steps to protect themselves, right? And that's, I think, our biggest goal is to protect ourselves and our family and friends, and just talk about this, because then people can prepare and at least position themselves to kind of counteract some of the inflation through gold or through eventual cryptocurrencies. And then I think that's I mean, a great service for the world.
And for those who can't afford to even invest in things like you're mentioning, I mean, there are barter abilities. There are things that
Yeah.
people can do. There are ways. So, and I do try to talk about that as much as possible on my channel. So, and I'm glad that you think outside the box like that, because there's a lot of people, I think, just really honestly just telling people what they want to hear. And
Yeah.
I keep trying to explain to people, and tell me if you agree or disagree. But where we are right now, with everything that's been happening over the past few years, it's going to get a lot worse before it even starts to get any better.
Yeah, I agree 100%. And it's gonna, I remember being through the 2008, 2009 period, and it was pretty scary out there, Lehman Brothers collapsing and all that stuff. And it'll be worse this time. In fact, probably it could be years from now still, but it's slowly beginning now. And the inflation, now that we have high inflation, that's the beginning trigger for it, where the Fed can't just rescue us. And so I don't know how long they can keep things propped up, but eventually, you're probably looking at some sort of greater recession, or even something that mirrors the 1929, 1930s.
I think what we're going to experience is going to make the Great Depression look like we would wish we were experiencing it,
Yeah.
because I don't think they had as much comprehension of what they were doing 100% with the fiscal policies where they have now. And like you said, if they would have let things run naturally,
Hmm.
then it wouldn't have been as bad of a punch. But
Yeah.
but since they want to inflate everything and try to keep the system alive, it's going to make the fall that much worse. So I'm
Yeah. And I,
100% in agreement with
And
you.
I think one of the things to keep in mind is that from the ashes, actually good will come. So I mean, they always say, like, sometimes the forest has to burn down to restart and regrow. And I think for me at least, I look at it and say, I do think that the people will demand a currency that cannot be printed ad nauseum. They're going to demand, barriers, where a new currency can only expand X% per year with maybe the population growth, something that people can say, okay, I have confidence in my new financial system. And I think that will be the positive coming out of this. I hope, at least.
Okay. Well, I appreciate that, man. And for people who, are really enjoying, this conversation and want to keep up with your TA, one of the best places they can follow you is over on Twitter, because you
Yeah.
do keep updated information and you share a lot of the interviews that you're doing. This interview will be coming out on the 15th. By the time people watch it, I know you're going to be going live tonight with Debate Crypto, because I was on
Yeah.
their
Yeah.
channel
Debate
yesterday.
crypto. That'll be
So
fun.
you're making your rounds, it seems.
Yeah, yeah. No, he just hit me up, and it sounds awesome. I love talking markets and talking stocks, and the best thing in the world is, like talking and showing people the charts, and then they might have been like, just like all fundamental, and like, oh, and then all of a sudden you see that light bulb go on, where it's like, okay, maybe this does make a little sense,
Three,
where these lines are actually
two,
telling me something, and I
one.
actually can understand where the next big move is coming.
Well, and today, well, I mean, honestly,
Three,
dude, I
two,
really appreciate
one.
you, taking the time to share your knowledge and to share this information, because
On
it would
today's
be
Rice
really
Report,
easy for you
I
to sit
am
at
once
home
again
and
joined
do
by
this
Gareth
and
Soloway, who
continue
is
to
the
do
Chief
well
Market
and
Strategist
really
for
be helping other people. So the
InTheMoneyStocks.com.
fact that you
He
kind
has
of
been on
taken
the
this
show
out,
before, and I will
because
include
that's
a
one
link
question
down
that a lot of
below in
people
the
is, if
video
he's such a
description
successful
and
trader,
above
why is
for his
he
first appearance.
out here telling
Today,
people blah blah
the
blah blah
master of
blah?
technical
And
analysis is going to be
obviously
sharing his
there are some
perspective
really good
on
people out there
Bitcoin,
who have done really
cryptocurrencies,
well in their
gold,
lives, who
silver,
just want to
and
get
much
back.
more.
Yeah.
And You know,
And I think that's like you said, I mean, that's the most important thing. And it's,
3,
you know,
2,
you want to go to your
1.
grave whenever that may be, at least knowing you've helped some people.
On
And, you
today's
know,
Rice
that's
Report,
the key here
I am
is
once
that,
again joined
you know,
by
you can
Gareth
make all the money in the
Soloway, who
world,
is the
but
Chief Market
you have to have a
Strategist
full
for
soul. You have to feel good about yourself
InTheMoneyStocks.com.
at the end of the
He
day.
has
And
been
that's
on the
one
show
way I can
before,
do that.
and I will include a
And I
link in the
appreciate that
video
about you,
description
Gareth.
and
Thank you.
above.
So,
For
if
his
you want to
first
take these
appearance.
last few
Today,
moments
the
and just
master of
share like
technical
what you guys are
analysis
doing
is going
over
to
at
share
In
his
the Money
perspective
Stocks, and
on
then
Bitcoin,
also with verified
cryptocurrencies,
investo,
gold,
investing
silver,
crypto.
and
Sure,
much more.
absolutely. In the money stocks is purely stocks and ETFs. So if you're into that kind of thing and you want to trade that, you know, basically I have a service under my name there at the top that's called verified investing alerts. So I put out, you know, when I get trade signals and charts align, I put out buy and sell signals on there. And I do a daily video where I go into hardcore technical analysis. Everything I think about, I kind of give you guys in those daily videos. And same thing for verified investing crypto, the same structure, except it's just cryptocurrencies. So yeah, it's awesome. It's really very cool. And it's, you know, it's, again, it's a service where people, the comments that I get make the world of difference, make me feel so good that I just want to keep doing it.
I love it, dude. And then the other thing that I really like is the fact that you're sharing verified trades,
Yeah.
where the gains are, losses, if there are any losses.
Yeah,
With
there is
yours.
one there, about
There is
2%.
one.
I'll tell
Yeah.
you, and I always say this is that, you know, right now I think we've done about 30 trades. I launched the service in November and about 30 or so trades, and I've only had one loser. And I tell people that's not going to be the normal. Just be aware. It's been an amazing streak, but I usually bat about 80%, but that's still 2 losses out of every 10. So people just, I always say that is like, just be ready, because I don't want them getting mad at me when we have another loser or 2 in a row even.
Nobody can be perfect. So I
No,
mean, for you, for even just this record, I mean, that's great. But even, I mean, 80% is a good ratio.
for sure.
And you obviously have the verified performance stats when it comes to inthemoneystocks.com. So if you guys are interested in getting involved in the crypto education, make sure you in trading, make sure you're checking out verifiedinvestingcrypto.com. And if you want to get the other side of things with the traditional stock markets and such, check out inthemoneystocks.com. And these will all be linked down below, as well as Gareth's Twitter account.
Awesome. Thank you so much.
Well, thank you, man. Any final thoughts before we wrap up?
Just you do a great service by talking about this stuff. Thank you for having me on, and I look forward maybe coming back in a month or two and we can do it again.
Awesome. Well, again, you're always welcome. So, ladies and gentlemen, I do appreciate you tuning in. Make sure you check out the links below. If this is your first time ever tuning into any of my content, make sure you explore my channel. I'd encourage you to be subscribed, and I will leave you with this: be blessed, be the change, practice change.